It's 5 p.m. and we're about to start. Thank you everyone who has joined so far. I'd like everyone to please, if they can, share this meeting with anyone they know so they can learn something insightful from this webinar. Great. So, good evening, everyone. Thank you for joining us today. My name is Andrea Duplessis, and I'm representing Medea GH Limited. We're a real estate solutions company that's all about making property ownership accessible and straightforward for everyone. Our slogan says it best: ownership to you. Whether you're a first time buyer, an investor, or someone looking to build, we provide services from land acquisition to building consultancy, construction, management, and financial planning. Our mission is to guide you every step of the way, ensuring your journey to property ownership is seamless and affordable. Right. So today we're here to talk about something really important: financial planning for your first property. Buying land or building your first home can feel very overwhelming, but the key to success is having a solid plan. That's why in this session, Mr. Boye-Mensah, our experienced financial consultant, will walk us through who walk us through the budgeting essentials, strategies for financing, and practical tips for making your dreams of property ownership a reality. We're very excited to have you here, and we encourage you to participate fully. Ask questions, and we hope you get us the most out of this session. So let's get started. Ben, can you hear me?
Loud and clear.
All right. Okay. So, can you just give us a quick introduction of yourself and tell us who you are, please?
Okay, so my name is Benjamin Boye-Mensah Addo, and I'm a financial consultant and an accountant. I also do audit services. So yeah, so that's what I do basically.
All right. Okay. So, can you share your screen to us, please?
I wish to officially welcome all the participants so far. I am glad that when I shared the link, they found time out their busy schedules to join. So once again, my name is Benjamin Boye-Mensah Addo, preferably Boye-Mensah Addo. Benjamin is like a pet name. And I'm going to be your speaker for today on the topic financial planning for your first property, be it a land or a house. So the key things to pick out of this is budgeting for land acquisition and financing options available for first-time real estate investors. Now, to own a property that you can call your own in Ghana is one of the biggest life goals that one could have, but it proves daunting and extremely expensive for first-time buyers. So probably the participants now basically own real estate that they already have financing but want to improve it. They have real estate that they want it refinanced, or they actually want to enter the real estate for the first time. At the end of this webinar, we look at providing guidance on financial planning for your first land and your house. Okay, so one would ask, why buy a land or a house? But there's a quote from Russell Sage, an American financier, a railroad executive, and a Whig politician in the New York, says real estate is an imperishable asset, ever increasing in value. It is the most solid security that human ingenuity has devised. It is the basis of all security and the only indestructible security. Okay, so why buy a land technically? Because the first point is that it increases your capital, it increases your value. So capital appreciation technically means a rise in an investment market price. So what it means is that it is the difference between the purchase price and then the selling price. Secondly, why should somebody buy a land? Is because land is a finite resource. There's a quote from Mark Twain. We all know Mark Twain. Says, buy land, they are not making it anymore. And that's a perfect explanation to what land as a finite resource means. Nobody can make lands. Back in the days, they were selling lands around Adenta. Everybody perceived Adenta to be a place that you take about 5 cars to get to. Now you can't even buy a land in Adenta. because technically the lands in Adenta are finished. Okay, land has multiple uses. So when you buy a land, you can use it for a lot of things. It's not something that is fixed in use. So you can use it for agricultural purposes, residential purposes, recreational purposes, commercial purposes, industrial purposes, among others, because of its economic benefit. In economics, land is considered a factor of production, which is also the same as labor in creating goods and services. So land in itself is an important commodity, and especially in our Ghanaian set. Why would somebody buy a house? Because when the person buys the house, the person can sleep in the house. If you do not want to sleep in the house, you can give it out to rent, and then you earn something out of it. You can say same for the house in terms of capital appreciation, because when you buy the house today, in some years to come, the value at which you bought it will reap. You earn a lot on the house with the passage of time. Okay, so the main topic for today is financial planning. What is financial planning? So financial planning, when somebody mentions financial planning, it's all about finance. It's all about finance. But there are key elements in financial planning. So first off, you have to set goals. Secondly, you have to assess your current financial situation. You have to create a budget, which is very important. You have to manage your debt. You have to save, invest, and actually protect your assets. So when you buy a land, you don't just plan in just closing the land deal. You also plan in protecting it. People have bought lands and they've lost it because they didn't plan to cover the protection of those assets. So the last point is also very important. So why is financial planning actually important? Because it helps you avoid debt and financial stress. Financial stress simply means you have a difficulty meeting basic financial commitments because you don't have money. That is what it means. And then the second point is to build wealth over time. You know, there are get rich quick schemes, and then they seem very enticing. But the tried and true way to build wealth is through financial planning. That is a tried and true way, irrespective of the get rich quick schemes. If you plan properly, you are technically building wealth over time. It may not come sooner, but then it will pay off. The third point is to achieve long-term financial goals. So you want to be Dangote in the next 5 years, and then you just sit aloof. It doesn't come in handy. You have to financially plan. Fourth point is understanding the costs and responsibilities involved in owning a property. So when you plan properly, like I mentioned earlier, you understand that there are costs even after closing the land deal, and then what you need to do after you have closed a land deal or you've actually purchased the house. And then the last one, avoiding unexpected events. So if you fail to plan in all of these, you as a person, you suffer shocks. So in turn, you can get stroke. Land guards will torment you, and all of that. You can even lose your life out of it. So if you fail to plan financially, a lot of things can happen to you. So first off, when you are in this financial planning conversation, you first have to define your financial goals. So the property that you are seeking to acquire, is it for a primary residence? Is it a rental income? Is it an investment property? A primary residence is in terms of, so let me give this scenario. You realize that your earning capacity in the next 5 years is subject to to reduce. So but then your earning capacity now is high. So what you have to do is that you need to secure an asset that in 5 years time, even though your earning capacity has reduced, you're okay. So a typical example is for people going on retirement. While you are working now, you need to understand that there's going to come a time where your earning capacity will reduce drastically. So what you do is that you acquire what you need to acquire now. Then when you are on retirement, there won't be so much burden on you to acquire assets. Secondly, rental income. Typically with people who venture into purchasing houses, you can give your building out for rent, and that's going to increase your cash flow. Also, for the people acquiring land, you know, you can charge rent for people to use the land for commercial purposes. And an investment property, some people can just buy the land, put it there, hoping that capital appreciation will set in, and then they sell it off. Secondly, you need to assess your financial health. This is very difficult. This is very, very difficult in assessing your financial health. So in assessing it, you need to analyze your income. So income basically is money that you received, especially on a regular basis from work or maybe from investment. Secondly, you need to analyze your expenses. These are outflows of cash. So money that you spend. Thirdly, assets. So an asset is like an asset is basically any resource that somebody owns that carries an economic value. The fourth point are liabilities. These are technically like money that you owe. Okay, so in assessing all of these things, so when your income is high, your expenses are minimal. You have a huge asset base, and then you have less liabilities. It stands among all other things, like all things being equal. It means that you have a strong financial health. Okay, and this will also help you budget properly. It will help you budget properly when you know your income level, you know your expenses level, you know what you have in assets and in liabilities. It helps you to budget properly. Unlike somebody who doesn't know their income, they don't document what they earn, they don't document their expenses. It's very daunting a task to budget with such a person. So now let's talk about budgeting for an acquisition. There's a 50-30-20 rule. So what does this 50-30-20 rule says? It says that you should spend 50% of your net income on your needs. The 50-30-20 rule says that you should spend your 50% of your net income. Net income, in essence, is what actually comes to you after all charges. You spend that on what you need, 30% on your wants, things that are not necessarily, if you don't spend on, you won't die. You can spend 30% on that. So the key word is that you should spend up to. So for the 50% up to, which means that you can spend less. The 30% you can spend less, and then the 20% should go into saving. So the 20% is non-negotiable. You should save 20% of your net income. Okay. Now, in budgeting, the first point you need to do is that you need to calculate your net income. I have already mentioned that. You need to track your spendings, your expenditure, and set realistic goals. You want to be like Dangote, but you earn somewhere around 1,000 cedis. Excuse me, I no disrespect, but you earn 1,000 cedis a month. How long will it take for you to be a Dangote? You need to set realistic goals. Now, the fourth point is that you need to make a plan. You need to make a plan. So you need to make a plan. The fifth point is that you need to adjust your spending to stay on budget. You need to adjust your spending. You take 5 balls of banku a day, but because you're on budget, you reduce the quantities of balls to 3, just so that your spendings conform to the budget that you have crafted. So creating a budget does not necessarily mean you are saving, or you are creating a budget to only close the deal on the real estate that you are trying to acquire. You need to also budget on closing fees. You need to budget on maintenance. There are taxes on some of the assets that we acquire, and there are other expenses. It is quite vague. So let's just leave it at that. So you don't just budget on just closing the deal. You budget on closing fees. There are closing fees that you charge especially when you involve professionals. There are closing fees that they are insignificant technically. We have a team of experts that when you want to enter a deal of sorts, they can assist you and charge you. It's technically insignificant. You won't even feel the pinch of it. You also need to budget on maintenance, budget on property taxes and other expenses. Now, what are the financing options that are available to first-time real estate investors? First off, to even think of financing, you need to do an extensive research. You need to research on financing options available to you that conform with what you stand for. So technically, somebody would want to deal with banks because it is more credible when it comes from the bank. Other persons would want to deal with private lenders because it saves time, and it's even though it is expensive, it is reliable. That is my point. It is reliable. The bank will take you through a long process, but it doesn't give you any level of certainty that the money will come. But these persons, once they verify that your house is here, you are linked to this person and all of that, they might just grant you. So the types of lenders, we have traditional lenders, which are banks. We have credit unions. We have mortgage companies. Secondly, we have alternative lenders who technically are private lenders, people that we can talk to on a day-to-day basis, and then, oh, Charlie, give me this money and let me use it to do such a thing. They are real estate investment trusts. These people actually they finance real estate acquisition. And also we have online lenders. These are technically the same as private lenders. Okay, so let's look at the types of financing options. We have a fixed rate mortgage. Okay, so let me break down what a mortgage is technically. So a mortgage is basically a legal agreement with a bank to lend you money at an interest, and also intends giving the bank the right to take back the property if you don't pay it back. So that's what basically a mortgage means. So it's a legal agreement that a borrower enters with a bank to give them some money for a real estate at a fixed interest. Okay, so that's at an interest, right? And then giving the lender the right to take back the property if they don't pay back. So there are four types of it. We have the fixed rates. We have the fixed rate mortgage, which has a fixed interest rate. So the rate will cut across the period of the loan. And then there's an adjustable rate mortgage, which is variable. We have the bridge loans, is a short-term loan. Maybe you want to complete something short-term just so that you be able to, you have a property that you've set up that you are at roofing level. So you just need something small to just roof it up so that you can give it out for rent and then be earning some amount of money. You also have construction loans. These are solely construction loans. You can't use them for any other thing than construction. So we also have a payment plan. At Media GH, the payment plan works for the company and then our customers. So what it does is that you either make a down payment and then a fixed amount is spread over time until the balance is cleared. There are times too that our customers struggle with down payments. So what we do is that we just spread the amount over time for them to pay. So in entering this deal, there are key things that you need to look at. You need to look at the interest rates, the covenants. Interest rates basically is an amount that the lender charges the borrower as a percentage of the principal that is loaned to the person. So if you take 20%, 20,000 with the bank, they might charge you 10%. 10% of 20,000 is technically 2,000. So you need to pay attention to the interest rates. You also have covenants over there. These are promises. Technically, covenants are promises. You have fees. We already know what fees are. We have the loan term, the period that the loan stays with the lender, with the borrower, actually. We have the prepayment penalties. These are penalties. It basically has to do with mortgages, and then the eligibility requirements to be eligible for a loan or a mortgage. We need to pay critical attention to them. Now, before you are granted a loan or a mortgage from the bank, you need to build a strong credit profile. So first off, you can check with your bank your credit score. You can walk if you have a bank close by, whether your bank or a branch, you can just enter and ask them that you need to check your credit score. If you have a debt with them, you need to pay it off. And then you also need to avoid checking enquiries. So you just enter the bank, and you just almost every week you just enter the bank and say, oh, what loans are available for somebody like me? What loans are available for somebody like me? It raises concern that, oh no, this guy is bankrupt, or he needs money urgently for something. So it will raise your risk and in turn affect your credit score. And the more the risk, the higher the interest. So when your risk goes up, your interest rates will also go up. If you've been able to sort out your credit score, now you need to research your properties. So you need to conduct a thorough research on your property, be it a land or a house. You need to look at the location. Maybe you work in the ministries and you need a house to buy. You buy a house somewhere in Dodowa that is miles away. How do you stay in such a house? And especially if you want to use the house for you need to live in the house. It's going to be very difficult. But maybe if you need a house for to earn some rental income, then it could suffice. So you need to look at the location. Does this location work with me or not? You also need to look at market trends. So say, I mean, it is a known fact that lands in Kaswa are I'm for the want of a better word. I'm trying to be cautious about the words I say, but it's a difficult thing to buy a land in Kaswa because of the trends that we've had. Also, future developments that may affect the property value. So, assuming you buy a house close to a construction for a university, technically, if you use such a building, a house for rent, you will earn so much on it. So you need to look at the location first, the market trends, and then the future developments that may affect the property value. Okay. We also need to conduct due diligence. So you bought a house, you bought a land, you don't conduct any due diligence on the land. Pressure before you need to inspect the land, go and physically verify the land, go and physically verify the house. You need to do your title searches. You need to. I mean, this is very technical. When you come to media, they can help you do all of these things. You need to also look up the legal requirements for the purchase. So first off, you need to inspect the title searches, and then the legal requirements. Also, you need to negotiate on the price. Negotiation skills is not for everyone. So at Media GH, we have partners, some like TAFA Consultancy, TAFA Advisory. They can help negotiate better, especially on the price, on the contingencies especially, and then the closing dates. They would assess you yourself and then try and bridge the gap. So thirdly, we need to finalize the transaction. So after you've done your inspection, you have done the title searches, you need to review all the documents to the purchase carefully. At Media GH, we do not play around documents. We do not play with our documents. We ensure that our clients understand the documents that they are reading and then the documents they are signing up for. We also need to ensure that financing is in. You don't just enter a deal not knowing how to finance it. It is never done. It is never done. It makes you lose your credibility. It makes you look unserious. You need to know that, oh, I'm going to make an outright purchase. I have money to pay for this thing. I don't have money. I'm going to seek some loan. I'm going to do this. I'm going to do this with partners. I'm going to maybe my school group. I'm going to pull some resources together to be able to finance. You need to ensure that the financing is in place. You need to prepare for closing. So what this does is that it prepares you such that the owner of the properties sign them off into your name. Okay, and that is very, very important. People pay up for properties that they don't end up getting ownership of them because the real owners do not sign them off to them. Now, post-purchase planning. So there are properties that you acquire that doesn't end with just the purchase. You need to plan for post-purchase expenses. So there are maintenance. You buy a land that needs grading, that needs demarcation, that needs other services. If you don't plan, if you don't plan towards them, it makes it very difficult. It makes you ask yourself that was this investment worthwhile? If it may be a house and then you buy the house in somebody's architecture, does it conform to yours? If not, you should have planned to be able to do some renovations on the property. So we all too soon we've come to the end of the webinar, and I must say that when you come to Media GH, our terms are flexible. Our terms are very, very flexible. If you need to acquire land, you need to buy a house, you need anything real estate, you come to us. We have a team of experts that are going to assist you, that are going to help you from the planning process to the execution of it. Financial planning is not an easy task, and it is not also not for everyone. So what I would advise is that you need to work with professionals, especially I keep referring to TAFA advisory because I can vouch that they have a team of experts in closing deals. You need to engage your financial advisor as much because, of course, they charge you fees. Any question that you have, you need to ask them because that's the essence of which you're engaging them. And if you are able to establish a good relationship with your financial advisors, financial planning should be an easy task for you. Thank you.
Thank you. Thank you so much, Ben. That was absolutely amazing. Thank you so much. You put in so much work in that. I hope everyone has a greater understanding of how to finance, and plan for your first home. So I think it's okay to move on to the questions now. Is that okay, Ben? Or would you like to say anything else?
We can
Hello?
no, we can take some questions now.
All right, okay. So, number one, the first question is, could you provide examples of situations where a bridge loan might be a suitable financial option? So, considering the different types of loans.
So the bridge loan is technically a short term. It's not a long term loan. It's a short term. So you have a project that's already running, and then you need something to bridge the gap between completion and then returning it to
Mm,
a stage
mm.
of yes, to of depletion. That's just to bridge the gap between that. So I give a classical example. You have maybe you bought a vehicle with a faulty engine. You only need a loan for the engine, not the outright purchase of the car. So it will bridge the gap between a working vehicle and a broken down vehicle. Technically, it's a short term loan, just so that you are able to start earning something to pay it back.
Right, I see. Okay. Thank you. Thank you so much for explaining that. If anyone has a question, I like everyone who has a question to comment in chat and I will read it out. So don't worry. We have a lot of time left, a lot of time to answer questions or even give advice. So please take your time to listen and write down any questions you might want answered. Right. So the next question is, what are the specific costs involved in buying a property? And are there some, and what's the most popular one that most people overlook? So it's a two-part question.
Sorry, I was muted. So come again, please.
All right, I'll just repeat the question. That's okay. I'll just repeat the question and you could answer. So, the question is, what are the specific costs involved in buying a property? And part two of the question, what is a cost that people mostly overlook? So something that people don't know that they should be worried about, but then, they never actually remember.
Okay, so I'm going to classify them in three folds. So we have the pre-acquisition costs, we have the acquisition costs, and then we have the post-acquisition costs. So there are times that you need to buy a land, you need to go to where the lands are located. You more often than not, people give tips or sort of you take your surveyor to the field to verify that, oh, is this a legitimate land? That these things add up to the pre-acquisition cost. The acquisition cost is technically the costs that you make to purchase the asset. Now we have the post-acquisition cost. So this has to do with regularization. This has to do with if it's a building renovations and um, to some extent the legal fees. So these are the three groups I'm classifying them. What people more often than not they overlook the post acquisition cost. So somebody will buy a land and just leave it at that. They will not they think they have just bought the land, so the land is secure. So they don't care anymore. We at least you need to start something on the land. So these are post acquisition costs. You need to start something, at least walling. You need to wall it, but before that, you need to register the land in your name. Technically, these are post acquisition. People think that when they just buy it, they can just sleep and then the land will be there forever. I mean, Accra is tough. Accra is tough. When you buy a land in Accra and then you just sleep like that, I don't think you can go back to the land in even 2 years or 3 years time.
Oh, wow, okay. Okay, wow. So, okay, we're going back to credit scores. Going back to credit scores, I actually did not know something like this existed in Ghana. So how does someone improve one's credit score in Ghana specifically, on the basis of, going to get loans from the bank to fund your building project?
So to improve your credit score, I think that you just need to pay off your debts. If you have an existing loan, just pay it off. And then stop inquiring about loans with your bank. When you do that, it impacts on your credit score. when you sound off as desperate for a loan, it increases your risk and intends your credit score. So that's basically what I have to say. Just pay off your debts and then stop inquiring too much with your bank about about loans, available loans to you as the customer.
Hmm. Right. Okay. Thank you so much. Okay, so from William is asking, are there hidden costs apart from the three mentioned? So, are there any hidden costs when it comes to the legal fees and litigation of that type of sort? Is there anything that we need to
Yes,
watch out
yes.
for?
So yeah. So we call them miscellaneous. I mean, things can come up. You can go to the site. Maybe you take an equipment to the site and it breaks down. It's not something that you actually plan for, but it's happened. So we classify them in our miscellaneous expenses. They are hidden. You do not. If you use it, fine. If you do not, it is a gain to you.
Okay, thank you. Okay, so from next one is from Trisha. Thank you, Trisha. Can you please explain the main benefits of investing in land versus buying a house? So although we always although we want our customers to have the best, of course, of whatever they need, what is the benefit of either versus?
Okay, so this is actually a debate. I cannot give you an answer to whether you need to buy a land or you need to buy a house. This is a debate, and I do not intend to end the debate. But the benefit comes with you knowing yourself. So somebody needs something in say 2 years, needs something that can earn income in 2 years in terms of capital appreciation. So what you do is I just invest in a land. I think a land will be worthwhile for you because that's a short term investment. You can earn something, but not technically to the potential, not essentially to the potential, the earning potential of it. So if you need a house for an accommodation, it will be very wicked to tell you to buy a land and then develop on it because it's going to take quite a while to be able to do that. So it's a personal thing. It's a personal thing. It's subjective. So you will need to know what you need, and then you just invest into it, be it a land or a house.
Right, right. I understand that. I mean, what's the point in buying land when you can buy a home, which might be more or less along the same, costs? So, yes, to everyone's discretion, I suppose. Okay, so the next one from William. William, thank you so much for participating so much. Is are there any relevant tax exemptions to enjoy should you sell a property? And when would one enjoy a tax relief if there is any?
So I do not have the figures of head. When you come to Media GH, we have a team of experts that are going to provide you with all these details. But what I know for a fact is that when you sell a land for a domestic purpose, it is VAT exempt. That is what I know. That for a domestic purpose, it is tax exempt unless you sell a land for commercial purpose. Then I think a 25% or so thereabout VAT applies. So that's what I know. But then if you need further clarification on things, you reach out to us. We'll team up with Tafa Advisory and then we'll provide you answers.
Okay, thank you. I hope that was understandable for you, William. Thank you so much. Moving on. Next one is, how can someone determine whether a construction loan is the right choice for them? So, at what point in time does one say, okay, I need to take a loan, take out a loan,
So
and
yes, okay. So I made a point about an individual assessing your financial health. So when you know your financial health, it would help you determine which financing option you need. So perhaps you have some amount of money to buy a land. Okay, you are a person who needs to put up a structure as soon as possible near a university, just so that you can rent it out to students who may not have access to the hostels. So you've been able to successfully pay up for the land, but you need to put up a building as soon as possible, just so that people can rent it, and then you also earn some rental income. You've secured the land. All you need is a construction loan. and the construction loan cannot be used for any other purpose but construction. So I think this is self-explanatory. When you assess yourself and you know that you do not have the strength, you have the strength to actually acquire the land, but do not have the strength to be able to build or construct, put up the structure. Just reach out to your bank, tell them that, okay, I have this land and I have the documents to it. And this is so you can enter a deal with them that even if I'm not able to pay, so that's a covenant technically. I hope you get the point.
Yes, yes, of course. Yes. Okay. All right. So I just wanted to read out a comment from William. He says that this webinar was right for him. We're glad that you're enjoying the webinar so far. And he's currently deciding to venture into real estate investing. Do you have any advice for him, possibly from your expertise?
Real estate is not for the weak. Real estate is not for the weak. You need to assess yourself. Are you able to take shocks? Are you able to take risk? If you are able to answer these questions, then real estate. But however, real estate is rewarding. It's very, very rewarding, but a daunting task. So you need to assess yourself. That's how much I intend to make on this real estate investment I'm about to take. Is it worth it for the risk that is attached with it? If you do your analysis and then you realize that it is worthwhile, take it. I will not advise anybody to take it or not take it. You will have to assess yourself that is this something that I have to take. Thank you.
All right. Thank you so much. Okay, I have one more question for you before we put this to a close. Thank you again for everyone who has joined us so far. We really appreciate you spending some time with us and taking time out of your day to join us right now. I just have one question for you. What advice would you give to someone pursuing your profession as of 2024?
This is a question that I haven't actually prepared for, but um, actually, I enjoy what I'm doing. I enjoy what I'm doing because it conforms with um, my values, and it is rewarding, financially rewarding, socially rewarding. So I personally would advise the youth. I'm a youth anyway, but I would advise anybody trying to pursue my profession to take it and study hard. I mean, yeah, that's all I can say. I do not want to stretch it, but if anybody wants to do it, it's something I enjoy doing. I have no regrets pursuing this profession. I look forward to even doing more of it. Um, so anybody can pursue it. It's a good thing.
Thank you very much. That was beautifully said. So I think you were okay. All right. So that's that for us for today. There's no more questions left. Unless someone wants to ask another question, please feel free for this final minute, and then we shall close. All right. Okay. So there are no more questions, it seems. All right. So thank you all for being with us today. We hope this session has given you a better understanding on how to plan financially for your first property. Pardon me. At Medea GH, we believe that owning a property shouldn't be out of reach. And with the right knowledge and guidance, it's a goal every Ghanaian can achieve. So remember, we're here to support you in every step of your property journey, whether it's acquiring land, planning for your construction, or even handling the paperwork. If you have any more questions, feel free to reach out to us on our social media. Our Instagram is at MEDEAGH_LTD, Medea GH Limited, or you can email us at info@medeagh.com. Or you can also visit our website at www.medeagh.com. So let's keep in touch and make our dreams of owning a property a reality. Thank you so much again for joining us, and we hope you can have a very wonderful evening. Thank you so much.